So welcome to today's live lottery on scaling strategies. And so we have Ali consulting the team, Jehushaya Enterprise. And with that, I'll leave it to Ali to introduce himself and take it from there.
Great. Well, thank you very much, Marie. It's an absolute honor and pleasure to be on board with this fantastic organization. This is my first, I suppose we've only known each other for a week, and I was quite surprised and delighted to be asked to do this session. So let's hope that I'm not going to disappoint you. So basically, my name is Ali, and I have sort of been involved in enterprise and entrepreneurship for a good many years. I studied horticulture at the University of Bath and graduated in 1982. That just goes to show my great age. And then I managed to do a PhD there as well, which was in seed technology. And thereafter I continued and I worked with as a geneticist at John Innes. This is how I got to know about Marie. We have some common interest or common organizations in the past. And eventually life took a slightly different turn, and I ended up in commercial side of horticulture, worked in Guatemala, set up some farms there, and came back in the UK, was an advisor for a UK horticultural company, and ended up promoting the use of beneficial insects as an alternative to pesticide. And that was quite rewarding. And that engagement brought me in touch with some supermarkets. And I'm originally from Iran. And at that time, UK was coming out of a horrible incident, food incident, which was the mad cow disease. And the intention then was to have traceability on all the products that supermarkets were selling. And therefore, I was asked if I could connect or facilitate more transparency in traceability of pistachio nuts. Where I come from in Iran, that's what we do. We grow a lot of pistachio nuts. And subsequently, I ended up setting up a factory here in UK in 1992, and I ran the business for 16 years, grew it from nothing to multi-million turnover, sold the business. The machinery was moved to Holland, and in almost 10 years ago, nearly 11 years ago now, I kind of retired from that business, and I said, I'm very keen and interested in business. How can I continue to be engaged with that? And then I ended up setting up a consultancy firm, which was providing business support. And my first ever contract was with the University of Bath, their innovation center, and I became the center manager, and finally became the deputy head of enterprise for university. And 3 years ago, I moved on and became the project manager for an agri-tech incubator in Gloucestershire, which is called Farm 491. Ran that for a year and a half. I'm now back in my own capacity as a self-employed business growth consultant and operating under the brand of Acorn Biz Solutions. And I suppose in the last 10 years, I probably have touched base with well over 100 different startups, student enterprises of different ideas, different stages of growth, helped them to raise funds, helped them to find teammates, helped them in many ways. And some of them, I love them so much that I actually invested. So I invested quite a few of them. So I share your pains. I share your ambitions. I congratulate you for doing what you do. And if there's anything I can be of any assistance in that journey, more than happy to do so. So to begin with, I think the best thing to do to start this session is, I've told you a little bit about me. It's over to you, Haggy, to tell me about you and your business, where you are in terms of your business cycle, and then we can start talking about scale-up roadmap. Okay? Did you hear me, Haggy? Haggai? Your microphone is still muted.
That is a shame.
Have we lost you?
Do you think he's still there? I just be great to hear from him. Okay. I mean, we can say what we know about their team. And Haggai, please, 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 when you can, just start talking, so that you can take it over and so that you can introduce what you do, because I have very limited information about what you actually do.
I've got the document that they submitted for the competition in front of me now.
Exactly, that's perfect. I have a little blurb that the team gave us about what they do. So they are a small scale company training and mentoring young. We hear him? No. So they're a small scale company training and mentoring young, passionate, and sustainable entrepreneurs. They're solving the problems of high rate of malnutrition in sub-Saharan Africa by using formalin as a preservative for fish during transportation, growing populations, and the need for quality and disease-free fish. That was the little blurb about them. And then Ali, you know more about them from the application as well. And again, Haggai, it'd be great to hear from you. Please do just jump in when you can. To unmute yourself, just click on the microphone icon that's at the bottom left of your screen.
Okay, well, let's move on. Let's hope and assume that he actually can hear us. So I understand the challenge here is about strategy for scale up, because clearly they've been doing some work. The company been going for 2 or 3 years. They've got some sort of team. They've got some sort of traction in the market. They're delivering some products and services. Now is the thinking is, well, how can we scale this program up to become a much more established and long-term and sustainable business? When I'm to do this for, I have been asked to do this for many organizations, and I have a little sort of strategy for myself. How do I advise on scale up? And I use a particular methodology, which I have sort of termed it as to be shield analysis. But basically what it means is that you draw a little picture. I'm not sure whether you can see it. Hi guy, can you hear me?
Yeah, I can hear you, sir.
Yeah?
I can hear you.
Great. Do you want to tell us about what you do, please?
Yeah.
Hello.
Hello, hi guy. Can you hear me?
Hello. It's kind of network challenge. Hello.
Yes,
Hello?
we're hearing you. We're hoping to hear from you what you do at Jehushaya Enterprises, please.
Okay. Basically, what we do as this organization, hello.
You're good.
Hello? Yeah, carry on. I can hear you. No, I'm afraid it's not.
Yeah, I wonder if the connection is not great on his end, which is a shame.
So do you think if we do it on just voice, would that make any better? Can we unmute the videos?
Yeah, that was just my video. It's gone now. So again, Haggai, we would love to hear from you, because this works better when it's a conversation between you and Ali. Although otherwise, Ali and I will have a conversation, but we would love it to be for you and Ali, because this is a chance for you to ask him questions. So please do tell us what you do. Oh, he's dropped out. I feel like maybe the internet connection isn't great.
No.
I hope he'll join us again in a minute. But Ali, you were telling us about the shield analysis, I
Yeah,
think.
yeah. I use methodology, which is basically the shield analysis. The reason it's called shield. And if you can you see this, or you're going to need your video back on again?
Well, your video is off, Ali, so we can't see
Okay,
that.
can you see
can,
this little sort of amateur drawing?
No, you need to turn it on by clicking on the video icon at the bottom of your screen.
Yeah, well, I have tried, but he says he can't because he says I cannot start video because the host has stopped it.
Oh, that's weird. Okay. In that case,
because you've unmuted yours, therefore I can't.
Interesting.
Okay, well, let's try now.
Yeah.
So can you see it? Hold on. It still says can't do it.
Hello.
Interesting. That's weird. Okay. Well, is it worth just describing it for now, and afterwards,
Yeah, sure. I'll describe
the recording, we'll add it as well.
Okay. So basically, the shared analysis is composed of basically it's a circular shape or shield shape, and you sort of divide into 4 quarters. And each quarter you spend, what you do, you take your team, your entire team, your senior managers, your junior managers, your everybody, you go to a retreat, you go to take some time off, you go maybe for a day or half a day, and during that meeting, everybody in the room will have immunity so that they can be free and open to speak about whatever is important for them in the business. And then what happens during that meeting, you got 4 quarters in the shield, and the first quarter in the shield is you explain, you discuss the current position of the business from all aspects, from the revenue, market position, opportunities, competition, product, services, team performance, staff performance, that you basically map out the entire scenario of the business as it is. And what you do next is trying to reflect amongst the entire team, trying to reflect on what people and everybody believes the company would like to see the company in 5 years' time. So basically, you say where I am now, and then you have a plan, an ideal scenario where you like to be in 5 years. And once you've got that 5-year vision mapped out, and everybody says, okay, we want to be in so many different countries, we're going to be in so many different locations, we want to be this sort of revenue. So basically you map out your future vision as to what you like to be, where you'd like to be in 5 years' time. And the next quarter of that shield is that then you start talking about how are we going to get there? So what is it that we need? What resources do we need in order to enable us to reach 5-year vision? So it could be that you need new premises. It could be that you need a more processing capacity. Maybe you need more staff. Maybe you need more senior staff. Maybe some partnership, and most importantly, you probably need some finance, some additional cash coming in. Either it's going to be grants, investments, philanthropy money, somehow it needs to come in. And finally, on that quarter of the shield, then you start analyzing, well, in order to achieve my 5-year ambition, what are the obstacles? These obstacles due to competition, maybe new technology, or possibly you may have the wrong product, basically doing more R&D and bringing new things onto the market. So I think by having that mapping out, your vision in terms of where you are, where you want to be, how are you going to get there, and what are your obstacles, once you've got that amongst, as a collective everybody's thoughts and ideas, then you can put it down onto paper, and from that, then you can start building a roadmap of where you think, where you're heading for, and how you're going to get there. And that's how I would often engage with my clients in order to advise them on their scale-up strategy.
Okay, that's a really interesting scheme. So I mean, so 5 years in advance, right, to me seems like quite
Well, it could be 3
far in
years.
the future. Do
Yeah,
you kind
it
of
could
break
be.
it down
It
then
could be
by,
2 years. I mean, it's a totally random number.
yeah, sure, yeah.
For this particular team, you could be looking at next year. You could be looking at next month. But the problem is, in based on my experience, a lot of the startups and company owners, they're so busy with day-to-day challenges. They don't take sufficient time off from the day-to-day challenge, step back and look into the future.
Yeah, so kind of looking at the bigger picture can help you form your strategy and understand what you need because you constantly
Exactly. Rather than constantly doing this, you really need to step back and look at the bigger picture. Where do I want to be? Because that will help you to readjust, reevaluate some of the functions, some of the actions, some of the investments, some of your recruits, people taking on board to meet your sort of aspirational future directions. Does that make sense to people?
Yeah, that definitely does make sense. Because I think, I mean, I think I see it in like day-to-day life as well, right? So, and there I'm stressing, I've got things to do, I've got to buy food, I have to cook, I have to, get the things done for work. There are loads of things that I need to get done. And then if I take a break and if I just say, okay, what's actually really important right now? What do I really need to do? It almost like breaks it down, and it also takes the pressure off, I think, as well.
Yeah, and most importantly, in it, because as the business grows, basically, you've got to make sure that you scale not too early. After you have done your product market fit, so you know exactly what is sort of achievable, what you're doing, is it feasible, what you're doing, is it viable, and do you have sufficient number of customers on board that are willing to pay for what the product and service you're offering. And then once you've got that, and at least you have some feedback, some recommendations, you've gone beyond the initial feasibility study, and you got some traction in the market, then how do I scale it? The scaling then is really the case of finding additional customers from existing product you're offering, but also innovation in producing additional product. So you're constantly engaging with your existing customer base, you're expanding your customer base and making people stay with you rather than wanting to engage with your competition.
Yeah.
And part of the scale up is that, again, quite often the senior managers tend to overlook it, is that they're quite shy sometimes to ask the question, have I got the right team around me? Because that is quite crucial for people to be in synchrony and have the shared vision, rather than not talking to each other, but constantly kind of going their own way, because to them that's the best way. And this is why having this 5-year strategy or 3-year strategy is that at least everybody is in tune. We're all pushing and pulling in the same direction, rather than all wanting to realize our individual goals. Whereas a collective goal, your business scales much faster, much more securely.
Okay, so that's going into kind of the people management then.
Exactly.
So it's really, so you say it's important so for example, to do this exercise, to get everybody on board so that everybody knows the vision they're working towards.
Yeah.
Yeah, perfect.
Exactly. Yeah. And sometimes what during that discussion, what actually transpires is that your current, say, for example, CTO, the Chief Technology Officer, he's probably better at marketing. So you can actually identify people's skills in that senior management, and don't be afraid of shifting people around, depending who does the best job for the particular task they're in hand.
Yeah.
So basically, making sure you got the right person for the right task, even if it means having to a bit of shift around. Sometimes, a lot of the company founders, they're great. They're very good at articulating their passion in the business. But most of the ones, based on my experience, most of those people are not really very good at business. So
Okay.
for them to do, to bring somebody on board that actually has got much business acumen, rather than being the founder wanting to do everything.
Okay. Oh, well, that's going into a very interesting direction. Before I go more into that, we have a question from Stanford, who's asking the best time duration for scaling up a startup. So do you kind of plan 2 years in advance or 5 years in advance? Do you kind of dream big and then break it down to, to say first year we want to achieve this, at the end of the second year this?
I think that's a very good question, and that really depends on many factors. And for me, the most important factor is that if you you got to be mindful of what else is happening in that particular area. If you've got a very aggressive competitor in your field, therefore you need to be quite speedy. So maybe a 5-year vision will not keep you sufficiently aggressive enough to maintain your market share. Maybe you need to react a lot quicker. So I know it's a combination of the environment, but certainly having a vision, having a plan is a must. But in terms of speed, it depends on your resources, the competitive environment, the readiness, your technology readiness, your product readiness. All of those will come into play. But ultimately, I would say certainly 2 years is the minimum. Ideally a 5-year, but you could break it down. You can have year 2, year 3, and year 5 milestones. So you can be a lot more agile and be able to react to changes in the market much quicker.
That's really interesting. And I hope that answers your question, Stanford, as well. So on that note then, so a lot of our startups, or the startup life spans are often quite short.
Yeah.
Right, and especially at the beginning. So like you say, you're breaking into the market, you have something that works. So much like the team, Jehushaya Enterprises, so they're training people, right? So
yeah,
we have a fair few teams that are kind of working in that sense. So which means that they've made these personal contacts, they have people they're training, they have this kind of small following that's worked really well. And then the idea is, how do you take that, what's working on that scale, how do you make yourself known, and and how do you break into the market in general and take it to a wider audience?
I think for that one, obviously the people they're training at the moment, they aren't going to be the most valuable asset, because ultimately they need to capitalize on these people to make them their ambassadors. They become their sales force effectively. If they've had a good experience, if they've benefited, and if they've gone and actually were able to get some sort of return, or a social return or financial return for themselves, why not support these guys and say, look, why don't you become, or word of mouth promotion and on training is very, very important. And therefore, I would say that from early days, from early traction, use your people you engage. And right now, I'm involved with a particular program currently with University of Bath, supporting postgraduate research commercialization. We struggled to get some students come on board to attend our training programs. But once we had the first cohort of 8 or 9 students, they loved it. And all of those 8 people, now, if they could bring one friend each, or recommend 1 or 2 more people to come to our next training program, the whole thing starts mushrooming.
Yeah, for sure. And how, I guess you have to kind of find the balance between getting what you want, but also not being too annoying, right? Like you don't want to, so what ways can you get the most relevant and useful feedback, and how do you do it in a way where people are happy to give that back to you, as opposed
Sure.
to them being like, oh no, you're badgering me?
Yeah, no, it's fine. I mean, at the end of the day, and I did this English saying goes, there's no free lunch. So why should they spend time, their time, giving you feedback that ultimately the benefit is then for you? So somehow you've got to make it a two-way relationship. What do they get for it?
Mm-hmm.
And many scenarios here, especially in technology sector, where there's a lot of referrals, app referrals, the customer referrals.
Yeah.
What happens? You could start giving some discounts, or you can start giving some points. You can give them something that it makes it worthwhile for them to get engaged with the platform, because they know at the end of it there's reward. I don't know whether you recall, there was a snack company recently, Graze. I don't know if you've seen them or come across them in the UK.
Yeah, I have. Yeah, but do you want to just give a really quick overview for those who haven't come across it?
Yeah, well, Graze basically is a small box of little compartments that contained lovely little selection of snacks. It could be nuts, it could be savory, it could be all sorts of things, and it was primarily targeted at younger generation, and particular students. So what would happen if I ordered a box of Graze? When the box of Graze arrived with me, in the box were possibly 6 vouchers, that if I gave one of those vouchers to my friend and they cashed in that voucher and they became a customer, when they ordered the first order with Graze, I will also get a free box of Graze.
Mm-hmm.
So that's how they build their business. They now ship millions of boxes of snacks every day and every week. So clearly, using your existing customers as a means of promoting, using them as your ambassadors, is a very, very effective tool, as long as there is something in it for them.
Yeah, agreed. And how do you do that on a limited budget? Because now, if we continue with the example of Graze, right? They will. So if I'm an early adopter, and I receive my box in the mail, and I pass it on just to one person, and he gets his free box, and I get my free box, that's then 2 free boxes that Graze has just given out.
Yeah.
How do you, do you say, okay, we'll try this for a month? Or do you say, well, I guess, do you look at your finances and say, this is how much money we can spend on this, and then we hope to make this return afterwards?
Yeah.
Yeah.
But I guess ultimately in sort of in startup scenarios, you have to be able to select the customers that will give you will have the highest what we call the lifetime value.
Mm-hmm.
So therefore, I'm not going to be, if I'm targeting, I don't know, a certain demographic, if I'm targeting the students, a certain age group, or people that read certain things or interested in certain sports, and that they are more aligned with my proposition. So therefore, I want to identify them to begin with, and then spend my time promoting them, because ultimately they will have much greater value for me long term than somebody who just comes in and dips in and goes away again. So it really is down to your ability to do analytical and calculations on your customer base, and breaking them into what we call customer personas, and identifying them in the way that I'm finding the most suitable and aligned with your proposition, and investing your limited resources to support them. But obviously, startups universally, to begin with, they've got zero cash. So how do you capitalize on very low budget, but still get reasonable amount of publicity, reasonable amount of marketing, so that you get you're known in a much wider world. But for those, I mean, exactly what you just did for this session, competition is often quite a good way of doing it. because you can have a reasonable size prize, but you only giving it out once.
Mm-hmm.
You're limiting your budget to competitions. We find competitions an incredibly effective tool of bringing people and at least getting them to know, bring them onto your website, and hopefully they will stay and they will convert to fee-paying customers. But it's just that, rather than dishing out like Grace did, and they're giving out box and box of free snacks. But with competition, you only have to do it once. But as long as that prize is interesting and attractive enough that and it compels me to engage with you.
Yeah, agreed. Okay, so that's almost like two different ways of doing it, right? So I think the overall thing is to look at the time and I guess money inputs compared to the returns that you're expecting, and I guess tracking that closely as well to see whether your strategy is working.
Yeah.
And I guess the other one then is like ways of, it's almost like finding a following, right? How do you find
exactly
to believe in your brand, and then you kind of grow that way? It's almost like growing in the soft sense of just people knowing your brand.
Yeah.
And then maybe even with things like social media to kind of having your message heard, for example, and then bit by bit you're going to get new clients that way.
And on the social media, again, depending on the type of business, what we find, and some of the business I've supported, writing good blogs, having a facility so that you become the thought leader in your sector. Because you're giving out good advice, B, reflecting on the current challenges and problems. So writing blogs, and particularly inviting some kind of key people in your sector to write a blog for you in a way that then validates your proposition, and people then start building trust in what you're doing. Sometimes you can engage with either paid or free people that are influencers. Again, in your sector, there must be people that actually people look up to. They come on board and say a few nice words or some testimonials, some quotes, or even write an article about promoting what you're doing in a way that they're validated. They confirm what you're doing is a good, positive action, and people should be engaging with it because it's the benefit of the society and global community.
Yeah, I think one thing that seems to be coming out of this talk is a lot about, it's about your reputation and people telling others about what you do.
Yeah,
it's almost like use that power as opposed to you putting all the effort into it. Kind of help spread your message almost like passively.
Yeah,
right? You engage with a few of them and you kind of let it go from there.
Yeah, and all of this, it shouldn't cost you money.
Exactly. Yeah. So we've gone over ways that you can do that without money.
Yeah.
So that will, that's kind of half of it. That means that now people, hopefully at the end of this, people are more engaged with my brand, with what I'm doing. Hopefully I'm getting more customers, which
just to complete that, I mean, there are a couple of other options in how to engage. One of them is actually have a month or 2 months of promotion where people can engage with you for either for free or at substantially reduced normal price.
Okay, so that's kind of like getting the early kind of
adopters on board.
An incentive for people to interact with you the first time.
Yes, exactly. Yeah. So you can either offer it as a freemium. Then they will see a much thinner version of the final product. But if they're interested, then they need to pay, either subscribe or buy the product. So whichever way you're trying to monetize it. And the other way will be basically say, okay, if you buy from me now, I've got the first 100 units coming off the production line, and whoever comes on board, you can have it at 50%.
Yeah, perfect. And
but in return, I want you to give me some feedback in the way the product works or the service works, and also, can I use you? Can I have an endorsement or testimonial from you? Can I mention you in some future articles? So basically, using it to create content, marketing content.
Yeah, exactly. And so I feel like this is almost like quite straightforward if you have a product.
Yeah.
So if we're thinking of then, you know, like our team here that was giving training,
Yeah.
could you almost do like a, you know, a mini session, like a taster, so that people could come, you know, hear, like, come for this half an hour session, hear more about what we're about, you know, so that they can have an idea of what a full training session would be, and then they hopefully come back for more.
Absolutely. I mean, the training is a very good idea, and another idea would be to trying to attend, sort of go to conferences and trade shows, and go to schools, go to universities, wherever you think your customer pool are likely to be, and give them some sort of taster sessions, invite them for a full session to come on board. So I think it ultimately really depends where your sort of the highest concentration of your potential target customers lie, where they are, and find a way of connecting with them.
Yeah, exactly, because then you're really looking for the people. Yeah. And so that's really good. So now we've done all that. We've grown our brand. We've got more people who like us, who are aware of what we do. We're, you know, having more people buy our products, but, you know, we still need, say, big investments to take it forward and to pay our salaries. So how do we do that side of scaling up?
Well, again, I think the biggest challenge for scale up is lack of cash, lack of investment, lack of money in the bank.
Exactly.
So you can, you know, scale up often happens in either companies decide to scale up and fund it organically, and that means you are much more aggressive in the way you sell your existing product, and you invest heavily in your R&D department, and you either not only improve your existing product range, but actually add more product range to your services. So effectively, you know, if you've got a customer on board, you know, if you've got one product or 10 products, so why not sell them 10 products? Because effectively your revenue is much higher, your profit is much higher, and you can reinvest that money back into the business and grow the business and scale it. But in terms of, it's not you know, this sort of scenario is probably 10% of the occasions, but majority of the occasions, actually some huge injection of cash from external entities, it's essential. Exactly. And that money could either come from some grants, so finding out who in your local area, in your country, or internationally is on board with what you do, whether that's something they are supporting or they like to support. Can you write a proposition? Can you write a bid to fit that particular call or a ground call? Can you write a proposition that could meet their aspirational requirements and therefore be willing to give you some grant money? And grants are good, because grants to me are hard work to get, quite a lot of management required when it comes to execution of the grant, but it's free money.
Sure.
You know, whereas if you go down the investment scenario, if you go to a venture capitalist or if you go to an angel investor or whatever, at some point you have to give up a percentage of your company because it's an equity exchange. So effectively, for 10 or 15 or 20% of your business, you might get $100,000, $200,000 sterling, whatever, depending where they come from. But for that, they will have some sort of reason for investing. The main reason is that they want to see their money grow. And after a period of time, say 10 years, they like to exit. So there needs to be an exit option. There needs to be an exit strategy, because they want to change. And if they're putting £50,000 into a business, in 10 years' time, they're like to get 500,000 back. Therefore, the business proposition to begin with needs to be on such a strong footing, demonstrating the revenue generation, profit generation, and more importantly, demonstrating the scalability of the business. Is there room in the local market? What our ambition in terms of export market? Therefore, do we have the right team on board? Are our team capable of delivering on those investment demands that investment will put on us? So it really is about, if you're looking for money, and if it's not grant, it really is about demonstrating a very, very strong case that you as a team, you as a company are incredibly safe pairs of hands to put my money in, because you have sort of convinced me that you are capable of growing my money and returning a profit to me in a certain period of time. So for that, you need to articulate a really compelling proposition backed by good market research, reliable market research, to say that this idea is fresh, this idea is new. We've got so many customers so far, and we are confident of scaling the business and increasing our customer base by 10 times, A, through the existing product, B, through the R&D plans that we have, that we want to bring in new products. So we're constantly evolving and staying competitive with our competition on the market.
Those are such great points. And it's almost, I mean, this, we've made one follow after the other in the call, but I feel like, again, to make this case be better, you want to do the first things we talked about. So where you get the word out about you, where you have your following, where you have people, back your brand, so that you can make this proposition kind of better and more thorough to find someone to invest in you.
Yeah. And a lot of the investors these days, generally, they don't invest. They invest in ideas, but 70-80% of the time they actually invest in the people. So
that's something that
very important that the team needs to be shall we say, be a sort of a complete team that covers all aspects of running a business. And they need to be confident, hopefully with some experience, good education, and all of those are critical in terms of what we call de-risking that proposition for the investor.
And what if you don't have all the capabilities you need on board yet?
Well, you need to start recruiting. You need to start, working, putting your word out through your LinkedIn, through your social media, through your various channels, trying to say, well, or through your organizations. You got a portal to say, I'm looking for a teammate, and therefore be very clear as to what you need, and be very good at asking for the right qualifications, experience. And once you find that person, make sure you do you research their background, you validate what they say, take references, and ultimately bring them on board. Initially, it will cost you money, but in the long term, if that's what will get you to the next scale-up stage, then it's worth doing.
Absolutely. And yes, I mean, TFF is there for that, like you quite rightly say. So that is part of our challenge, right? We're really big on community and network. And so that's really where Slack comes in, where people can very easily interact with each other and find others either working on similar topics, interested in similar topics, or are in the same location. And that's one of the things that we really want to foster at TFF.
Right.
And we have some great examples where teams have found through us, and that makes us really happy when that happens.
And again, the team, it's so important. The team needs to be agile. They need to be willing and able to restructure the management as the business grows. So delegation. So if one person is doing several tasks, but don't hesitate to break that down and bring in. I don't know if your marketing person also been doing HR, but the company grows to scale, that you make sure you have a dedicated person who looks after HR and you have one person dedicated to look after marketing, because ultimately the scale of the challenge becomes so much bigger that it's beyond the capability of the one person doing two jobs.
Mm-hmm. So, I mean, you mentioned, so one of the courses in Digital Labs as well is how to kind of grow a company culture and how much to think about that, because it's really important for you and for the company to kind of see where you're going to put this culture in place.
Yeah.
But then where do you, so, you know, say we have our company, we've just grown, it's getting a bit much, but we don't really, you know, we're at a point where we can get someone in and hopefully we will then work smoother, but we can't actually really afford them that much. And so we'd really hope for more investment. Or do we keep going, working at 150%, but that means that we can go a little bit further? How do you juggle that decision?
Well, I ultimately, I think that it's depending on the existing founders, because sometimes the danger with that is that you can burn out.
Yeah.
You can really burn out. And I always tell my startups, don't ever forget that you also need to have a quality of life. You need to live. You know, don't ignore your family, don't ignore your children, don't ignore. It shouldn't come at a cost. So in order to do that, so you could, once you find your dream person, I would rather, if I was me, I would rather cut my salary back and then bring that person on board, give them a 6 months trial. So look, let's see what happens after 6 months. If you're still smiling and we're still working together, we will give you an equity option. So basically, rather than paying them money, you can make them work in the business, because ultimately they know the harder they work, the bigger the business becomes, they're adding value to the business. At some point, they can cash their shares in and live after.
Yeah.
So you know, there are different ways of doing it. It's not all. It doesn't always have to be based on cash in hand. It can be tailored in a way. There's a hybrid. You can get sort of a basic salary, either with a bonus or some sort of future shareholding. So you know, it's down to negotiation.
Yeah, for sure. But that's a really good piece of advice as well, that there are these different models of doing this, and that even if you don't have the full salary at the moment, there are different patterns to kind of get over that.
Sure, but ultimately, really by you doing that, and the investor will see that, they say, well, actually, no, these guys are smart. They're not doing. They're recruiting clever people on board without actually, burning the cash out of the bank.
Yeah, true. And where do you think, you know, I'm sure there must be quite a few companies that were working fine when they were small, then they grew, and, you know, they failed at that point. Like, just when they, you know, it's kind of the point where they make it or break it, right? So what are some of the common reasons why companies fail when they start to grow bigger?
Again, I mean, it sometimes they just don't take enough time out of business to reflect on the bigger picture. They don't have a long-term strategy. So what happens? It becomes disjointed. People internally become dissatisfied.
Yeah.
Because their opinions and their views are not taken into consideration. Almost the person at the top is dictatorial approach. For me, the companies are successful because the ones that are most successful are the ones that actually work as a united team. And the only way that happens is when teams or senior managers at least work together and survive. Some of the classic failures, it's not keeping, losing their eye off the ball, in the sense that they're not keeping an eye on the competition. Look at examples of, for example, big companies went bust, people like Kodak, and people just didn't register. Digitalization was on the horizon.
Yeah.
And they just didn't react to it. So look at what's happening, look at the competition, and try to stay at least on pace with them. Otherwise, you're just going to lose the market share. And most of the time, the failures is just not anticipating the next challenge, therefore not having enough investment on board. Investment is a long, painful business, and it doesn't happen overnight.
Mm-hmm.
The saying is in investment round, you really got to kiss a lot of frogs till something comes good.
Yeah, that is a really nice saying.
Yeah. So you really got to go around and pitch yourself to many people. So it's like playing a good game of chess. You're not playing the current what you're seeing. You're actually planning 2 or 3 moves ahead, and that's what companies that fail because they didn't plan ahead.
Mm-hmm. Okay.
They didn't see what's coming. They didn't anticipate it. They weren't prepared for it.
Yeah, and maybe the plan that they've put together 3 years ago was great, but over that time, a lot of things changed and they needed to adjust it.
Exactly. It needs to be revised, adjusted, updated, constant, because the plan is out of date as soon as you put a pen down. The same with your business plan. As soon as you finish saying stop, that business plan is out of date because it needs to be revised. It needs to have an iterated many versions to keep up to date.
Agreed. So I'm conscious of time here. There is one question from Stanford who's asking, what's the best method of getting funding for a new social enterprise that would encourage the sustainability of the business?
I think that's a good question. Again, the funding sources from social enterprise, regardless where they are, I think you need to look at funders that are sympathetic to social enterprise in terms of their sort of criteria. Not all funders would like to fund social enterprises. So effectively, some funders insist on social enterprise. So it really just NGOs, philanthropies, various charities, people like, I don't know, Bill Gates foundations, various aid company or aid organizations that would like to support that kind of sort of organizations. In the UK, we've got a whole range of social enterprise specialist funding, dedicated funding for social enterprises. But obviously, for them to give money, you need to articulate clearly with clear outputs in terms of your social return on investment rather than commercial return on investment. So you need to be able to say, if your objective is, I don't know, for example, if you are helping homeless people, you need to say, how many homeless in a year are you going to take off the streets, and how you're going to support them, how you're going to support their long-term rehabilitation and reintroduction back to community and society. So you need to understand the funder. If you want to identify a particular set of social enterprise affiliated funders, understand them. What is it they're after? What is it they want? And can you meet and match their expectation when you put a funding bid together?
Yeah. And I mean, it comes down to kind of the gathering the right data, really displaying that you are the person to tackle this, right? It's really, it's formulating that in a good way so that they will fund you. Perfect. So Stanford says, thank you for the answer. Thank you, Ali.
You're very welcome. You're very welcome. Hopefully it's been a useful few minutes together, and I'm sure I'll be happy to engage again as and when you guys are ready. Have any more questions, just come through Marie. It'd be a pleasure to chat with you again.
Perfect. So, I mean, on that note, do you have any final words of wisdom for our teams?
To be honest with you, I think for me, the biggest mistakes that both startups and scale-ups do, they don't do enough market research. They just jump on board, and it's good to have emotion on board, but in business, whether social enterprise or an ordinary business, any business, try to lead with head rather than with heart.
Mm-hmm.
So you've got to make sure that you've done your research and you are not wasting your or giving or spending your precious resources on things that are not necessary at the stage of the business you are.
Yes, agreed.
Yeah,
and I think, it's plan it all out, structure it well, know what you're targeting, what your impacts are going to be, but then also do not lose your passion and your enthusiasm and your team spirit, and take it forward like that.
Yes, exactly. So if you need to develop a prototype, make sure that you produce what we call MVP, minimum viable product.
Yeah.
So effectively, it just proves the concept of the business. It doesn't have to have all the fancy features.
Exactly. And then
come later.
Perfect.
Yeah.
So I think that was a really nice way to round it off. So I think it was a really great call. And I hope that the team's got a lot out of it on how to take your business from a small something to a scale up into a bigger venture, and some things to look out for, some things to avoid. And as usual, the recording of this will be on the Digital Labs. And if you have any questions or want to follow up with me on anything or with Ali, just let us know and get in touch with us, please. Great. Have a wonderful rest of your day.
Great. Well, thank you for the opportunity. It's been a pleasure.
Yeah, I'm glad. No, it was great to have you. And yeah, good day to everyone.
Okay.
Bye.
Good day all. Bye-bye.